Hey, it's Coach JB. I just want to come live really quickly and do a quick update to my video this morning about the Jackson Hole meeting. So Jerome Powell shared his statements and nothing too catastrophic. So the markets responded very favorably to it. Crypto market is doing very, very well, as well as the stock market as well. So he was very soft with his statements, but what I'm going to do is I'm going to break this down. This will be a very, very quick video. I just want to go live really quickly in between meetings here. But I wanted to follow up with the last YouTube video I did. So if you're watching this today on the 27th, go back and watch the video that I posted. And so here is Jerome Powell's statement. So we're going to go over this together live here. So it says Powell sees tapering by the end of the year, but says there's much ground to cover before rate hike. So he's very, very delicate around the wording with this. So Federal Reserve Chairman Jerome Powell indicated Friday that the central banks is likely to begin tapering before the end of the year. Likely is keyword. So remember, how I do my research is I listen to their words and then I watch what they do. I listen to their words and then I watch what they do. But he said rate hikes aren't imminent and there's still much ground to cover before the economy hits full employment. The speech was part of the Jackson Hole meeting that I talked about this morning. So we're going to watch the rest of this together right here. I'm going to make this a little bit bigger so we can watch this. And we're going to watch this video right now together. And this is his basically his statements on this. But I want to do a quick follow-up. This will be just a couple minute video, but I wanted to do a quick follow-up on the video that I posted this morning. So let's watch and see what Jerome Powell said about tapering and rate hikes.
Incoming data should provide more evidence that some of the supply-demand imbalances are improving, and more evidence of a continued moderation in inflation, particularly in goods and service prices that have been most affected by the pandemic. We also expect to see continued strong job creation, and we'll be learning more about the Delta variant's effects. For now, I believe that policy is well positioned.
Okay, so really key. So everybody just kind of takes things just like surface value. I always go deeper. He talked about the Delta variant, right? So he's bringing up, hey, the Delta variant is a factor, right? So these are very soft verbiage that he uses around the tapering, right? So he's saying on the back end of the year, but let's listen to the words that he says. And the market responded favorably because there was not this hard line. We're going to start tapering on the back end of the year. The Delta variant, there's a lot of different factors that he's placing in here.
As always, we are prepared to adjust policy as appropriate to achieve our goals. That brings me to a concluding word on the path ahead for monetary policy. The committee remains steadfast in our oft-expressed commitment to support the economy for as long as is needed to achieve a full recovery.
So they're going to use their monetary policy as long as they need to get a full recovery, right? So it's like a mixed message. We're going to start tapering on the back end of the year, which he's going to say. They don't know what they're going to do. We got the Delta variant. So there's so many factors out there. The way he positioned this was very appropriate for the market conditions right now. And based on the way he had positioned it, he did say they're going to start tapering on the back end of the year, which is likely. Likely is not yes, we're going to, but that allowed the market to continue to do well.
The changes we made last year to our monetary policy framework are well suited to address today's challenges. We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals measured since last December.
Okay, so what he's saying is we're going to continue our asset purchases, right? So they have to purchase assets to continue the quantitative easing, right? Their bonds purchases. So they're going to continue at the same pace that they're going, which is a very rapid increasing pace. That's basically what he's saying right there. So they can keep the QA going, which is a quantitative easing.
We first articulated this guidance. My view is that the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year. The intervening month has brought more progress in the form of a strong employment report for July, but also the further spread of the Delta variant.
Okay, so that's key right there. He said, we had favorable reports in July, but we have not got the reporting for August. And now we have the Delta variant, which is starting to put pressure again, right? So he can pretty much say what he's kind of saying two different things. We have the Delta variant. We may start tapering a little bit. So the media is reporting it as he stated that he's going to start tapering, right? He says it's likely that we will. Delta variant, he brings it up multiple times. You hear him bring up the word inflation multiple times.
We will be carefully assessing incoming data and the evolving risks. Even after our asset purchases end, our elevated holdings of longer-term securities will continue to support accommodative financial conditions. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We have said that we will continue to hold the target range for the federal funds rate at its current level until the economy reaches conditions consistent with maximum employment.
Okay, so this is where the market responded very favorable. What you're worried about is when they start tapering bond purchases, right? And then they stop the massive QE quantitative easing. What they usually do is they have these rate hikes, right? He just said, we are going to hold the rates where they are. So people who are borrowing, the elites who are, or the wealthy people, right? You can get money for so cheap right now. It's unbelievable. So everything he said was very favorable for the market as we go through this bull run coming up.
And inflation has reached 2% and is on track to moderately exceed 2% for some time. We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis. These are challenging times for the public we serve.
Okay, so that was very simple, but I just wanted to bring that to you guys. Not a really long video, but I just want to share with you guys my opinion. So I shared the video this morning that I said if he announces tapering, right, we're going to see some pullbacks in the market. He did announce we are likely to start tapering. Very different than saying hardcore, we're tapering. He also said in his speech there, he said, we are going to continue the same bond purchases we're doing right now. So that means quantitative easing. These checks are going to still hit your bank account. And what that signals to the big money is that we can keep taking this quantitative easing money and pumping it into assets. And so that's what's happening. So think about the Cantillon effect, right? The Cantillon effect is as this quantitative easing comes into the marketplace, goes to the richest people in the world, and it flows down to the people. And when it gets down to the people, your inflation, your gas prices have gone up. So by the time that same money has hit you, it's actually has a devaluation, right? Because your gas prices, you may have got a pay raise, but your gas prices have skyrocketed. So the products and goods and services are going up as the QE is coming down to you, the quantitative easing. And so this was very, very favorable for the crypto market, for the stock market, right? So it's going to continue to be completely overvalued, the stock market. And remember, he said, we're likely to start tapering. And he kept saying the Delta variant. How many times did he say the Delta variant in there? So that gives him the get out of jail free card to continue doing the bond purchases. Now, remember, we have the debt ceiling that needs to be approved by October 1st. They need to raise the debt ceiling. And ask yourself this. I did a really deep dive call with my private warriors. You can join our Warrior Academy link down below. But yesterday I did there's private calls that I do with them that I can't talk about on here because obviously, you know, what they would do with the account. But I really went deep into the system, right? I went deep into the understanding of what I believe is happening. So you want to ask yourself a question, and I'll share something, a high level overview. So in 2019, they were already preparing for a downturn. Interesting, right? We hadn't been part of the C word and all the stuff going on, right? Around 2019, they started to do some QE, quantitative easing, right? And they also, for some reason in 2019, created a suspension on the debt ceiling from 2019 to July 2021. Ask yourself, why did they remove the debt ceiling limit, suspend it for that period of time? And then all of a sudden we went into this thing where we look this way and there's a whole nother narrative happening this way. So this was very favorable. I was very excited to see this. I know I did the video this morning, but I wanted to make sure before I go into my next meeting that I did a follow-up video with you guys. And like I said, whereas I'm going to continue to bring you economics, I'm going to bring you the economic side, the banking side. And I don't ask you to believe a word I say. You know, I'm not a financial advisor. None of this is financial advice. I'm a guy who spent 12 years in banking, broke free from the matrix, started a freedom company. I've helped thousands of warriors all over the world break free from this just over broke paradigm. But what I'm trying to do is to get you to think differently, to think like the elites, to think like the millionaires, to think like the billionaires, right? And so I spend my day and my research team and my technical analysis team, we spend tons of hours researching and understanding this at a very deep level. But what I'm not trying to do is convince you of anything. I'm just trying to open up your mind and awareness to a new possibility so you can do your own research to make your own informed decisions. That's what this is all about, Warriors. I'm working to help you free your dome. Free dome. So I live a free life. I come and go as I please. I'm a CEO of a company with multiple companies, and I can do whatever I want when I want, Warriors. And I'll tell you what, the way that the multimillionaires and billionaires manage their money is very different from the working poor. The working poor's liabilities are the rich people's assets. Let me repeat that. The working poor's liabilities are the rich people's assets. So you've been built into a system where the liabilities that you buy, like cars, your credit cards, your home loans, those are the wealthy's assets. So it's about breaking free from that system, understanding that you have the opportunity right now in history. There's never been an opportunity like this for everyday people, the working poor, to get involved in the biggest shift in generational wealth. There's two things happening. We have a new asset class where people can amass a pretty large amount of wealth in a very short amount of time. There is no get rich quick, but by having a long-term strategy after that, you can set your whole family up. So it's about getting hyper focused right now, Warriors. Hyper focused. Get rid of the frivolous spending, get rid of the nightclubs, get rid of all the bullshit, right? Stop going to happy hour. Give yourself a year and a half. That's what I did, 1 year and a half, and it completely changed my life. So I just want to drop this quick video for you guys to connect with you guys. I want to follow up on my last video. I usually don't do 2 videos on Friday, but I'm going to continue to bring these information. I appreciate all the comments on the last video. I want to talk about XRP and all the crypto space and the price appreciation every single video, but that stuff gets a lot of views and a lot of likes and a lot of comments, words. But this stuff is really, really important. So I'm going to be mixing. This is what I love to talk about, the economy, because I'm working to build generational wealth. And it's crypto is a very, very big part of that. But it's also, in the grand scheme of things, a very small part of it, because generational wealth comes when you do not have to work for your money. Money is your employee, Warriors, where your assets are paying for all your liabilities, where you're cash poor and you're asset rich, and you have money coming in from every single anal out of your anal everywhere. That was funny. I love you, Warriors. I appreciate you guys. I got to jump into another meeting, but I wanted to promise and follow up on that video. So if you haven't watched the video from this morning, go ahead and watch the video from this morning. That'll explain this follow-up video. So I love you guys. I appreciate you guys. As we always say, Warriors, rise, get your shit together. Let's go. Have a great weekend, everybody. I'm going to have a video where I'm going off tomorrow morning. You guys seem to like those ones where I just talk off the top of my head. Have a great day, everybody.